Hey everybody, David Skrika, stock chart of the day here. So this is Thursday. I might have something to do today. I'm gonna get a members update up either today or tomorrow. So we're gonna look at the QQQ. So what's interesting is, I had started to kind of wonder if this, summer blow off 87.29 scenario can now could happen. And I was starting to think, when I saw the Dow transports rolling over, a lot of internal weakness happening, but of course that happens at tops. But it just didn't look like the momentum was there. But what we must remember is, like in 1929, for example, the big move didn't start till right this time frame, like early June. I'll get the chart up again in a second. Early June, late May, early June. So we can see here the QQQ hit a new high yesterday, 463 on the QQQ, which is the Nasdaq 100. So let's get the NDX up so we can see that. And we see the Nasdaq, so the Nasdaq had new high. So really, this spring correction and a move into the summer is still in motion. I'm not participating as much as I thought it would be. Partly as I had a small AI deal, and my stop, this thing's not doing well, and my stop loss got hit. So just tells you sometimes maybe you should just buy the leaders, right? So my stop loss got hit on it. So I'm just kind of watching. Obviously I have some other deals. I have gold deals, et cetera, et cetera. I actually have an interesting drone deal that's on my radar now as well for paying subscribers. So but anyhow, this move here, you can see, I talked about the little correction and now move higher. So the question is, are we going to see again this classic summer blow off? And I'm looking at the Nasdaq more than the other markets because I think the Nasdaq is more key because we're all the dynamic countries or companies were in the Dow in 1929. That RCA, all the growth, what we would consider growth companies, GE back then. Well, now all the growth companies are in the Nasdaq. The AI companies, the chip companies, tech companies, etc. So that's why the Nasdaq is probably the most important index to watch in terms of a potential crash scenario. So let's go back to that 1929 era. So we're going to go back to 1928. We'll go back to June of 28. And we'll go to the end of 1929, 2029. 29 there we go. So I got the Nasdaq here, so I'll have to get the Dow. So this kind of shows you here, and again, this would be the thing we're at right now. Yeah, you can see. Sorry. This is where we'd be. The late May, like I said, moving higher. And the Nasdaq's a little ahead of this because you can see the Dow didn't hit a new high until about mid to late June. So we're a little ahead of schedule. This consolidation was much longer though. It lasted basically 1, 2, 3, it lasted almost 4 months actually, right? So our consolidation was just a few weeks. So the question is if we're seeing this kind of move here. So if we saw this kind of move, nothing's gonna be exactly the same, but it would essentially mean like we hit a new high in the coming weeks. We'd probably go sideways for a little while and then see that last move higher into August or so. So I would slowly begin to get defensive if it looks like something like this would happen. If we look at this move here in the Dow, it's 290 to 380. Well, let's go back to the Nasdaq 100 and we can see, this move started at 1700. 290 to 380 is about 25%. Now, I don't think we would go up quite as much this time, but 29%, 25% from 17,000 would be about, 4,000 points. So we'd still have another 2,000 points, about 21,000 would be the top. So we still have about another 10% higher from current levels if we have a similar type move. But yeah, you can see the similarity is really there, like especially when we look like a 3-year chart and you can see this move here. Now, granted, we did have a good size, mini bear market in 2022, but again, that happened in 1998 where there was a mini bear market that summer of 1998, and then the market blew off into 2000. So you can say, oh, because we had this mini bear market, the market actually can go up longer than just 2 years. But again, that happened in 98, so etc. So we'll have to see what happens. But I just wanted to show you that. And of course, the stock leading this whole way is NVIDIA, is going completely parabolic. The one thing about parabolic curves, they all collapse, but you don't know when to short them. I have not stood in the way of NVIDIA. But I think now we're getting to the point where their next earnings in August is going to be very, very difficult because we're 30% above where NVIDIA was pre-earnings, and we're 40% above where it was in early April. So it's just going to be very, very difficult for them because the valuation, it's got a $3 trillion market cap. Look, I'm going to show you something. Canadian economy. Okay. So the Canadian economy is, okay, we'll go Canadian economy size. That's what we'll do. Yeah. The Canadian economy is 2.14 trillion. So NVIDIA is essentially, and this is in US dollar terms, by the way. So NVIDIA is 3 trillion. NVIDIA is almost, 40 to 50% larger than the Canadian economy. So Canada's got a pretty, Canada's in the G7. It's one of the largest economies in the world. So it just shows you how huge this thing is, and how ridiculous we're getting. And it's trading at 35 times sales. And there wasn't an excellent article, it was either on investing.com or Yahoo Finance that talked about that, when companies get to those kind of valuations, 35 times sales, usually it doesn't go well for them. Like all those companies I've talked about, like 3D printers, they were kind of doing that back in 2014. They all got up to 30, 40 times sales when they were kind of the flavor of the day and bubble, and they all collapsed. DDD. Let's quickly look at the chart. We can see here, well, that's the COVID spike, but it's, $4 a share. And then, DDD, essentially, the stock was $4 a share, and it was $100 a share back when, back in 2014. Okay, so I was going to stop on that. QQQ new high. Will it keep running higher? Well, again, if the 29 scenario, 87 scenario continues, yeah, we should go higher for another few months, or another month or two. So, but I would again continue to kind of take profits and sell and become defensive into that. Everybody take care, and I hope you have enjoyed Stock Chart of the Day.